Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple. I hope everybody's having a great kind of holiday trading week. Um, Back to our normally scheduled programs, right? The year is almost over. This will be the last of the 2020 current market analysis on identifying potential opportunities. Actually, we will have a new name next year. So if you guys haven't gotten signed up yet, I do believe that the new signups are there for next year. We're going to change the format around just slightly, but we're going to keep the same Tuesday afternoon kind of midday kind of analysis and things for going forward. So obviously today will be a little bit different, less trading volume, no news or anything like that this week. So we'll look for some of the potential opportunities and kind of see what's out there. December is always a strange month for trading in general, just because a lot of the hedge funds are done. Mutual funds are doing some rollovers. There's a lot of rebalancing on kind of an institutional level. I know you guys have heard me mention in the past that my wife works for an advisory firm, and their December is always crazy busy because of the same type of end of year type of closing shop. So it's interesting. Some of the biggest market movers are not necessarily in force in the market like they would be. So trading is a little bit different if you are still currently trading. But it's also a great time to kind of review and reflect what you've done this year, as well as prepare for what's next. Obviously, this January is going to be a very, very big time. A new administration coming in, probably new monetary policy. Yellen is coming back in. So there's a lot to prepare for. And it's also a time, to talk about goals. What are you looking to get out of next year? And where do you want to take your trading? Where are you currently at right now? And really, where can it go? This is the week to do it. Go out there and review and look. And again, best way to do it is get a paper and pencil and really start kind of taking notes about what you want to change going forward. And again, one way to do that, if you guys haven't seen it already, again, a little shameless self-promotion here. There's a New Year, New You, kind of all-day event with 6 different speakers. Coming, I think it's January 19th, I think is the correct date. I know Todd said he would link it inside of chat for those of you that are not registered yet. I ended up picking market psychology this time, and the reason I did is because it's one of the aspects that is so challenging for most people to understand about the ins and outs of the markets and why we do what we do in the markets and things. So it was a great opportunity for me to kind of share my beliefs and my opinions and kind of what I've learned over 20 years worth of trading. And again, being on the inside, being an advisor, seeing how some of the large brokerage firms work, working next to Wall Street, walking past the New York Stock Exchange for about 2 years, being in there, being on the front line. So, again, that's coming up. But again, kind of think about those things today. So today's format will be slightly different. The birds are still here, obviously. They're like, oh, it's webinar time. Let's do this. I want to contribute. So for those of you that don't know me, I think at this point most of you guys do, but if you guys don't know who I am, I'm the president and CEO of Keep Trading Simple. And my mission is really to give you guys kind of the basics you need to trade, right? A lot of times people overcomplicate things. Professionals tell you need to have this secret sauce and that secret tool, and most times you really don't need that kind of stuff. If you guys have ever heard the analogy, KISS, I'm a big believer in that. I've created a number of different systems, particularly designated for Nadex. Really anything with limited risk kind of options you could use these things for, and as well as they do carry over into other asset classes. But been trading, as I mentioned before, since basically the tech bubble, the 1999-2000 time frame. So scenes, ups, downs, left, right, sideways. I am not a 12th generation trader. I like to tell everybody that. No, I'm a first generation trader. Started as a retail trader just like everybody else out there. Books, we didn't really have the internet when I started. The internet bubble was there, but YouTube wasn't what it was, right? We didn't have as many resources online. There was basically seminars that you could go to and books, go to the library. So I learned stocks, traditional options, fell in love with Forex, learned futures, found Nadex, a couple years ago, and just absolutely loved what it had to offer. And again, I've been doing these presentations now for Nadex for about 2 years now, I guess, 2-3 years. My goal for every single one of these sessions is to give you guys something brand new, a new way to look at things, a new opinion, something you want to add into your trading, or even maybe give you the confidence to try maybe something different. I was one of the kind of the early adopters of the smaller duration kind of binaries and different strategies you could trade with them. and hopefully you guys have seen the benefits of it and have added that into your trading. Before we begin, let me make sure I cover our disclaimer for today, because we are talking about charts and risk and potential profit areas. We need to make sure that we cover this. So trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing a cost in another transaction, including fees. The information presented within this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. And we will mention those three today. And Nadex is a registered trademark of the IG Group. All right, so with that being said, here's the agenda, the upcoming news events. There's really not a whole lot. I guess the biggest news event of this week is going to be 2021. Kind of a big one, right? Besides that, there's really not a whole lot of economic news releases. As I said, the business world is more or less shut down. It doesn't mean that people aren't trading, but again, it's a little bit different than what normal would be. Then we'll go ahead and we'll cover where the indices are going. Kind of a predictable kind of response today. Question is, what do we do next? And we'll go ahead and cover that. Then we'll cover the Forex realm. Now, from early morning till now, there has been finally some movement in the Forex realm. It was pretty dead going in this morning into that early day session. Got a little bit more movement now, and we'll go ahead and cover what happened and where we can kind of look to see things moving. And then we'll talk about commodities. Now, commodities, they are, I would say, more asleep right now. Just because, again, it is a lower, commodities are not something that the average retail trader just jumps in. Like, you don't just all of a sudden say, hey, you know what? I want to try trading. I'm going to trade gold and oil. You don't last very long there. So again, some of the biggest movers in those markets are not really in the markets right now. So we're seeing less and less movement of those right now. But I will still cover them, and we'll check them out on the charts. All right, so first things first, let's go over and let's cover the indices. You know what? Let's cover the news or lack thereof news, right? So let me bring this in, the trusty Forex Factory. All right, so earlier today, basically the only thing moving was the euro dollar. It was up about 47 pips in 24 hours, and everything else was pretty much flat. Well, since that time, we've had a little bit more movement. We've seen the pound dollar go crazy. The dollar CAD dropped about 80 pips. That one's actually moving a little bit. The dollar Swiss is down as well. Basically, what we're seeing across the board is, again, dollar weakness. There's no other way of ifs, ands, or buts about it. Dollars down here, here. I'm sorry, these are not dollar. These are the euro pound and the pound yen. Basically flat, right? I mean, what are we hearing? We're hearing Brexit, EU Council says the Brexit trade deal will be signed by both. Pretty much everybody's ready to go, but it's holiday season, right? Right? It's going to be signed by everybody. The deal is, compliant with UK sovereignty rules. I mean, everything is kind of like, yes, it's here. Whew, okay, great. And as I mentioned yesterday, the next big thing we're waiting to hear on the Brexit front is what additional kind of trade deals. Remember, they have like an outline and a basic framework, but it's not the end all. I mean, there's still some negotiations that need to occur. Now it's just like anybody else, right? There can be a negotiation on Monday about aluminum, and then Tuesday there could be soybeans, right? So now it's going to be, just additional kind of, I don't know, kind of minor details inside of trade deals, right? And those things can change back and forth day to day. So it's kind of back to normal, compared to any other country. But it is great that this got done. It's great that they're signing it. If one thing we've learned from both the UK and the European Union is it doesn't matter what they say, it's not true, right? We got deadlines in October, then we got November deadlines, then we got the EU saying, hey, if we don't sign it by Sunday, we're not signing anything. And here we are a couple days earlier, and everybody's signing everything, and they have agreements. So it was very interesting, negotiation back and forth, and yeah, it's just kind of interesting. And like I said, with the change of the U.S. administration, I expect to see more information and kind of transition team negotiations with the UK as far as a new trade deal between the UK and the United States as well. All right. But as far as news for the week, you can see that there is nothing until we get back into January. And again, January 4th is next Monday. We are close. We have OPEC starting us off strong next week. And we have some manufacturing data for both the Canadian and the UK, and a little bit for the dollar as well, right? For the U.S. So really, the rest of this week is pretty shy. Next Monday, though, it's off to the races. We go back to business as normal. And again, new year, new you, and hopefully, we'll see. Hopefully, it's an up year for the UK. Now they've been kind of beaten around. And it's been a rough year for them. So, right now, let's dive in and go look at some charts. We'll cover the indices first. Let's go across, and we'll go to here. So, first thing, let's go to the NQ. So you can see the NQ. This is a 30-minute chart. We've had a little bit of issues. Now, on a grander scheme, again, these are all little areas of buying in here, and I know it's a little bit busy, but you can see overall the NQ is extremely high. And again, it makes sense. COVID, technology. We just got stimulus. We expected it to pop higher. Now we're having a little bit more of a choppier day and kind of some negativity. Now, this is one of those ones that's a little bit harder to grab. Early morning, it was basically flat. You can say, well, wait, what the heck happened here? And there's been different headlines and things like that. But I think overall what it is this is, basically a direct byproduct of, one, low volume, two, stimulus not being great, three, the need for more stimulus, four, obviously COVID, unemployment. Overall, the market was expecting kind of things to get done, and they did, but not to the level that we'd expect. As far as how to trade this in this morning, you can see that it was a pretty violent reaction, right? This move happened literally at the open, and we got a little bit of a bump higher. And here's kind of why it happened and how you could have played it. Now, I will say, this is very difficult to be able to play, and here's why. With the market being kind of all at all-time highs up here, it's very challenging to say, hey, listen, where would I put my stop loss in? I know I feel like it's at an all-time high. I feel like there's enough negativity out there. I would like to take a short position, but when you're trading, the most important thing before you put any position on is figure out, when am I wrong and where is my stop? Okay. In this case, you can see that we had basically in kind of the overnight, right? We had highs at the UK Open, right? The London Open at 3 o'clock this morning is where the highs were, and price kind of pushed back down again. And then about right here, 9:30, this is called a trap. Okay. Soon as price popped again in here, I'll drop it down to 5 minutes so you guys can see. This was the high in the overnight. As soon as that broke, what did everybody and their brother do? I know it's breaking the highs in the overnight. We got stimulus. Hey, it's going up, right? Second, everybody started to buy. What did it do? Within 10, 15 minutes, boom, it collapsed all the way back to the downside. So again, it's a very common trap that you see, breaching new highs, even versus the overnight. You'll have people talk about, we're breaking the Globex high. Yeah, it was a trap, and it was immediately kind of turned back to the downside. Because again, is there anything positive that's driving the economy in the last week? No, not really. We heard that spending was lower, consumer confidence was down. Now we're hearing that, rumblings of Biden saying that, I guess, the new strain of COVID, or I guess the infection rates of COVID are going higher. I mean, nothing really overly positive for the economy. And again, that's why we saw such a violent move and then kind of a retrace back up again. And, for those Fibonacci traders out there are some Fib setups in here as well, had you used from at the high to low in the pullbacks. But for the most part, again, I mentioned it this morning, the way that it looked like it was going to be negative. A lot of times and again, this is not so much tradable today, I would say I'm probably more negative. I would look for a potential kind of bounce or, an overall target, down here around the 12,774. But a lot of this movement and a lot of the setup, these are standard things to do. And this goes back to, are you using the right product? So I mentioned before, the hard part about taking this short, or even, again, going over the S&P, it kind of had the same thing, although it didn't break new highs. But something like this, where you're breaking a new high, how do you put in risk that is, beneficial, right? Like established risk level. Well, one of the ways to do it is use a call spread or a binary, right? I'm not sure if there's a knockout up here. I didn't look at it this morning beforehand. It's been kind of a crazy morning, but using a binary gives you limited risk. If it shot all the way up, again, whatever it costs you to get into the trade, including fees, is your own only risk. So with the NQ high like this, again, today I wouldn't really do much more with it, but kind of keep this same level, this 12,900 level, on our radar for tomorrow, because we could have a similar reaction. Or even potentially, if it runs all the way down again, we could have the same type of setup with the Globex lows, though, with this low number down here. And again, those give us opportunities to trade some binaries, right? I mean, this was about, about a 100-point move. Yeah, a little 110 points in this one. So again, a lot of movement, fast and furious. And again, looking at this saying, hey, listen, what time was this? Oh, this just happens to be, look when the spikes occur, right? This spike here was at the open. This spike here at the open. This spike over here at the open. So The open tends to be where we're getting the most movement out of this, asset right now. Again, go into the lower time duration binaries, gives you lower established risk and lower strike width to be able to trade these. Okay, so that's again, that's kind of more about tomorrow and later in the week. Now S&P was a little bit different. Here's the 30-minute on this one. Again, we were button up to a level, button, and again, you can kind of see where this one, could have took off as well. Here's the 9 o'clock candle, actually the 9:30. The 9 o'clock is back here. This is kind of one of those standard openings. We were unable to go any higher. We can see that there's a level of sellers. The indicator pulled it in this one. You can kind of see here on the lower time frame. Again, we could draw this and say, hey, listen, there's our level of risk. Okay, so even though we were able to establish a level and a risk in this one, had this pushed a little higher, you still would have been able to use a binary or, really any of the three in this case. But again, we pulled back up fast moving. Now we're basing this one also. I would expect for it to come down back over here into the 37.28 range. Could that be an area where we take off tomorrow? Yeah, maybe. Looking at this, you guys can see that this area here, it's definitely an area where we've had some basing. It's attempted to go higher and then kind of retested back up again. So, right now, I would say we're more in whoops, not that one. I would say we are more inside of a consolidation phase. You have this coming this way, and you have these, the lows. I'm sorry, yeah, the lows getting higher. So it's consolidating in. I would say, hey, listen, a bounce top and bottom. Again, kind of see where we are looking for tomorrow morning at 12 o'clock in the afternoon. It's not always necessarily the best one, but this would have also been a great little binary trade this morning. You can see how fast this one dropped. We went from approximately around 37.52. And again, these are 5-minute candles, but down here, you're talking about what? 20 points in 1, 2, 3, 4, 5 in 30 minutes. Yeah, in 2 candles. Yeah. So in about 30 minutes, you moved about 22 points. Again, this is going to be one of those learning things. If you guys are unfamiliar with them, go down and look at what the 2-hour binaries are on the S&P, or even the 20-minute binaries. Right? There's 20 minutes on the indices. Look how much movement. Look at those strike differentials, and again, it could provide another trading opportunity for you or trading strategy first thing in the morning. Now the Dow basically did the same thing, and you can see this one is bouncing back and forth on the 30-minute. You can see that we obviously had a level up here, and we had a level down here, right? And both of them are being respected. This one's already a little bit farther ahead, but it's the same idea. We kind of had this top put in, right? Again, you can see that there was the level of basing, and then all of a sudden, boom, 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 failure to go higher, drop, base, drop. There was your touch this morning. That touch came in at 9:30, exactly at the open. We kind of pushed up, and then boom, collapsed right back down into the area of buyers. So kind of the same thinking. This one, I believe, is a little bit farther ahead. It's already kind of bounced off its other side. It's got a few levels in here, right? This kind of basing here, this kind of basing here. So, you're seeing kind of the first step of that confirmation, right? The push up, the pull back down again. Whoops. The pull back down. And, at this point, could this be the rally back up again? It could be, right? It could be. But again, it's 12 o'clock in the afternoon. We can kind of see where it goes. Now, with it being negative today, again, unless we have some blockbuster headlines, I wouldn't necessarily, be surprised if we have a rally back tomorrow, right? I mean, obviously, if we get a headline like, oh my God, COVID is getting twice as bad as we thought it was, or something like that, that's going to obviously provide negativity. But at this point, you're going to pretty much have a reversion to the mean because institutional traders are not there. They're home. They're on vacation. So this was a retail trader specific. And once they see this down, 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 oh my God, it's horrible. I need to sell too, is when it rolls and goes right back up again. So everybody that was long looking for breaks above, they lost money on the way down. And then when they start selling, getting out, everyone's like, oh my God, I need to get out. I need to get into this. That's when we start rolling the other direction. So, potential reversal coming up in this one. Overall, I don't think that the economy is great. It's whether or not the retail trader can be tricked at this point. But, we're getting some confirmations. And I would say if I, had to draw an area, I'll just use this one right here. You guys can see that this is kind of the area that we've had a lot of basing, right? We drove up to it, base, kind of tried to get out, tried it, went along, and then boom, boom. And then we're hitting it again. So, not a horrible level. If we get a break of this level down here around 33.10, I could also start looking for potential shorts and look for that one to, potentially come down here to the 300 level or the 30,000 level again. It's going to be a big psychological level. 30,000 was a huge boom once we hit it for the first time. If we come back down there again, it's going to kind of sway over to some major negativity. So, just keep that on your radar. All right. Now, switching across to currencies, like I said, currencies for the most part had not really moved earlier today. Fast forward a few hours, now we have the movement. Bring this one on hourly. Here's the extreme curve. I haven't moved it over today because I wanted you guys to see it. This is the same kind of level and areas that we've been talking about, kind of the upper and lower reaches of this one. As you can see, we kind of that 76.24 has been a number where it gapped. It got in here and dropped pretty quickly. Now has kind of grinded its way back up again. It's high. It's a level, but I mentioned it yesterday as well as last week. With everything going on, I do feel that the Aussie has pushed these limits a number of different times. We've been up to the 76.24 level. It is an extreme. If I was looking only at this chart, I would say, hey, listen, we got to get short again, right? I do feel like the Aussie wants to trying to grind higher. I do feel like with the world recovering, particularly with China, I know there's a lot of issues with Australia and China right now, but I do feel that as industry starts to pick up and recovery is becoming more and more normal, China's desire for natural resources and the things that Australia provides are only going to help the Australian currency go higher. So although I'd love to say, hey, listen, take this one short, we're at the extreme. It's happened many, many times before. I'm starting to get very cautious on shorts with the Aussie. So just keep that in mind. Is there another shorting opportunity in here? Yeah, probably. Probably one more because, again, this is your one test. This is number two. But again, I would take this, with a bit more caution than I would have versus, this hit or this hit over here. Okay. Again, year end, I expect dollar weakness will be something, going for, in at least into the near future. With the new administration, I expect there to be more stimulus. So on a fundamental level, I'd say I'm probably 75%, 80% technical only trader. But of that 20%, I do feel like we are in a situation where we will see continued dollar weakness. And that's not bad. Okay. And that's not bad. But right now, I would say, hey, listen, we could potentially get a rollover here. It wouldn't be horrible. Look for this one to come down. I would just be cautious in holding this much deeper than kind of in this level. Right. We've gotten a little test over here, but I think the 75-80 range, about 40 pips from where we are right now, would be a decent target and also bring us back into that middle third. Now, Aussie Yen would be another one. Aussie Yen, you guys can see, has been kind of bouncing back and forth, and it's been kind of stuck inside of this channel. Now, this is a much higher time frame. I think this was, it's the top side of this curve. It's kind of at an extreme range. The Aussie Yen is interesting in the fact that if you want to play Australian news, okay, and obviously this week we don't have any, the Australian yen tends to be the best one to do it with because, again, the yen is typically rather weak. Now, as you can see, this is not the most beautiful chart, and I hope you guys can see. I'm gonna make this a little bit better. This is a lot of small-bodied candles and a lot more wicks, right? I mean, going back, you can see this is nothing. Take the auto scroll function. You can see there's not a lot of strong, kind of consistent movement, chopping back and forth. So this is one of those ones right now that I also feel will benefit once numbers of China and recovery across the world start coming back. I do feel that this one will go higher as well. But right now, it's kind of that, kind of channeling back and forth. And we are a bit high. I would look for small intraday shorts, but this one I'm telling you is ideally the best one to be able to play with Australian news. We don't get that until next week. So that's kind of where we're kind of not stuck, but that's kind of where we are. This one you can see over the last, 16 hours, we've had a little bit of movement and then basically a couple days of not a whole lot. So it's not the most exciting. Now, Euro Yen. Euro Yen this morning, we were talking about getting just a bit higher, and all the news articles out there were talking about, oh, the Euro Yen is going for a breakout. And everybody was telling us this was going for a breakout. We mentioned it was high on the curve. Be a bit more cautious. And again, this one has rolled back down again. At this point, what I would do is I would establish the curve, and we can push the curve actually a little bit higher. We can go up to here, and at least on an hourly basis, we can start kind of looking at this and saying, hey, listen, there's our extreme range in any type of a pullback. Now, going up to a 4-hour, you can see kind of that's where we're standing curve-wise. It needed to go a little bit more before we got shorts. We talked about 127.37 being a great area. The 126.90-ish range, kind of where we are now, was the last area that we said, hey, listen, watch out for this area. Right now, I think, what can we do with this? We still have this kind of Harry Potter in here looking for a push down to 124.95. Right now, so the unfortunate thing is we had this alert up here at the 127.37, and we missed this one by a little bit. Yeah, we missed it by about 14 pips to the downside. I would say targets to the downside for me on this one would be probably down here at about 126.14. If we can get any type of a basing, I would say any of those are decent. Unfortunately, we're already into the trade a little bit. So what I would say is kind of mark this off on your radar. This 127.40-ish area, if we can get up there, that is a higher level zone. And again, I'd be interested in shorting it from up there. Right now, we're a little bit deep in. We're pushing. I mean, we're already about 55 pips in from that level. So I would just show a little bit more caution. I think right now on this one, I'm going to say I'm going to wait for 27.40, or I'm waiting for this to pull back down and then be able to give us a Harry Potter break of 125.75. I still do like this one coming back down into, the 124-ish range. I think that could be a decent. I mean, this is almost a 100 pip, short trade setup here. And again, we are kind of at that stage where, again, the European Union, they're going to be rolling out the virus. If, some of the things that we've heard this morning are true, they are just as much at risk as we are. All right. So again, let's keep that in our mind. Pound. So here's where we are with the pound. We were actually looking for a break last week of this one on the news. There's your 4-hour chart. We were talking about that. It's harder to see on that one. Anyway, this is one of those patterns that you got to watch out for, and it's kind of a little caution, right? So let me go back in time, and I'll show you where we were last week. And I said, hey, listen, I would like to see some type of a confirmation bounce and a punch higher, right? Well, we started to get that bounce, and then we ran into this. Okay, now this is one of the things that I gave you guys warning of last week. Was I said, I love where this is. I love the pattern. My big concern was the holiday. Okay, losing a lot of the power that and the emotional response, because again, remember, emotions and things like that and the big market swings come from retail traders, not institutional based traders. And unfortunately, with Christmas and holidays and things like that, a lot of eyes that would have been looking at this were not looking at this. Okay, now this pattern right here, it did give us the bounce, it did give us a pullback, but then it gave us a failure to go higher. And that's a pretty clear signal of, hey, listen, I mean, this is the pattern right here. This candle formation, this drop, this pullback, that's exactly what I'm looking for in most of my shorts when I'm talking about, hey, listen, we're in extreme range right now. I'm looking for some type of a confirmation entry. I don't want it to go any higher. That's exactly it. Okay. Since that time, we've come back down and we've stabilized. So I'm going to actually use this and say, hey, this is kind of the channel that we're kind of stuck in right now. But you can see this is the upper third of the curve, right? So I'm going to actually extend this a little bit here. I'm going to bring this up as well. So that way it's the kind of 30% right there. I'll remove this so it doesn't confuse everybody else. And I'm going to bring this back up and talk about 140.93. So at this point, again, we're not going to be worried about a breakout. I think at this point, the ship has sailed. Okay. But I will say I am kind of curious to see what happens right now when we break this level. Now, there was a nice little push here. And the reason why is because of this. Okay, right there. Okay. Now, the 1 to 3, it's a little bit far. Okay, we had some sellers coming in, but right here, so you guys can see it, this is approximately 138.70. The last time we had big buyers stepping in was 138.88, so it's not an ideal setup. It may be one we even actually kind of shrink this zone a little bit and kind of extend it across and say, hey, listen, there was the last level of basing. Let's refine it, in which case that would bring our kind of profit target a little bit higher into the 139.07. Maybe a better of a trade setup, but we're looking for that same type of confirmation bounce, and that would be a break of 139.50. Okay, again, psychological level, breaking to the downside, shooting for a target of approximately 139.07, so about a 40 pip runner to the downside. The 1 to 5 on this one is a little bit far for me. Ideally, it would be here, which would be about, I don't know, about 60 pips. So again, definitely something we could see. Again, going into the overnight, into tomorrow. Again, as again, number of different factors out there that could help drive the pound lower. But like I said, we were looking for a large explosion. Unfortunately, the timing of it was not ideal with the holidays. We did get the big rally up, but I think all the movement, all the institutional traders got their moves in early. Again, assuming that it was going to be done, and then unfortunately, the retail traders that were not theirs either. To continue the drive forward. So, but that's the current setup I'm looking at. Pound dollar. Pound dollar, we've been bouncing back and forth. 136.07 has been an area that we've talked about in the past. This one, going down to, let's see, go down to a 30-minute. You can see this one is not super exciting. We've really been kind of channeling back and forth. You can kind of see that, here was our weekend gap, and it kind of hit and went higher, and it just got boxed in, right? But 136.06 is what we hit last week, and since that time, this one's just been kind of on slow, right? Not a whole lot there. As you guys can see here on the hourly, there is a small level, and this could be one that we could be, interested in getting to. But right now, I would say if I had to pick a top and bottom kind of an intraday curve level, I'm gonna grab this one right there, down, bring that back to there, and we're gonna bring this over. Actually, it would be here. I'm gonna bring it there. So right now, 135.97 and 134.27 are kind of my two areas that I'm looking for. Now, we are high in the curve of these two. I like the 135 or 136. I'd like that zone better. Again, that's higher on the kind of larger time frame curve. This here is in the middle. It's a little bit riskier. It is a good area for profit targets. If you are short, I would say, hey, listen, definitely grab your profit at 134.27. But overall, whoops. Right now, I'm thinking, push down to 132.34 may be in order on this one. It's going to have a little bit of a hiccup here as well, right? We've seen price kind of hiccup off of that one. So again, if you are short from this level, make sure you're catching profit at 133.13. But I'd be looking for a bounce and a long off 132.34. All right. Now, euro pound. Yeah, that's pretty flat, right? Pretty flat. And we mentioned this before that, 90.92 was a level where we had some basing and nice push down with the whole kind of Brexit approval. And now it's kind of just rallied back and we're in that same level. I would say on this one, I mean, it's an okay level. It's in the middle third, so it's not my favorite of areas. It's an area where sellers have stepped in, but at this point, are they really there? I mean, there's no really strong movement off of this one. With the highs kind of coming in lower this one, I look at this and say, maybe, I don't know. This is not trending, so this is not really a whole lot. And we're talking top to bottom about 25 pips. So there's just really not a lot of room for us to really play this one. I think this one may be one that we roll into next year and we just, not focus on it as much. If I had to pick a direction, though, I would say, I'd be willing to take a short if we can get back up here to 131. I'm sorry, 91.39. This level, probably not much. I mean, right now it looks like it wants to be more bearish, but it just spent so much time there. I think this is a safer one, the 91.40. And the 89.50 to the downside would be an area where I'd be, maybe looking to go long. But right now with the holidays, low volume week, I just don't think there's a lot of opportunity in the pound, the euro pound. I think there's, and I quoted yesterday, the Brexit hangover is real. You know, they don't know. It's like that movie, right? What did we do last night? They have no idea at this point. I think UK traders are just absolutely spent. They're exhausted. It was a 4-year battle, and they're sitting in an ice tub right now. They're waiting for New Year's with their bubbly because, again, this has just been 4 years of back and forth and a fast and furious last 90 days, and I just feel that everybody's burned out of this one right now. So maybe not the best opportunities left. Now, you guys remember this was my makeshift kind of drawing tool, right? I was like, hey, listen, we've seen price up here, right? We've seen it here, 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 and here. And again, ideally what it does, it's actually pushed down. We got a little bit of a break above, and again, kind of the same thinking. This is, I know all these people are like, oh, support and resistance. Yeah, well, the trigger on your, resistance here to get in was what caused this to drop. Again, being at the extreme range of the curve, it did go slightly higher. It broke above the previous high. And again, for you support and resistance traders, very, very common pattern where it breaks, you go long thinking, hey, listen, all we hear about this morning is about how horrible the dollar is, right? Dollar weakness, dollar weakness, dollar weakness, dollar weakness, dollar weakness across the board. Everybody's doing it. And yet magically this goes down. And this has been a pretty nice run to the downside of about 33 pips in 2-3 hours. So where it is right now, I would expect this one to stabilize a bit more. We have a whole lot of basing in this level right here. So it's got a lot of chunk through. I wouldn't necessarily say it's going to go up either. It's kind of those ones. I'd kind of keep my eye on this, this other side here. On a 4-hour level, again, you can see that we are more in the I would like to get short area. But is this, the proper time to be stepping into it? I don't know. It's kind of one of those things with lack of catalyst. Yeah, a little bit harder to do, right? Let's mess it up just a little bit. Let me see. Let me pull this back. Yeah, you can see. There's where the zone was. And again, a break of this zone is a trigger for pretty much every support and resistance basic trader saying, "Oh, yep, that's it. Get long. We broke the level." But now we're stabilizing. So, in all reality, I would kind of like this one to come back down. Although again, this turned at the upper range of the curve, I do like this 121.14 down here. I'm trying to see. It's all right. I guess I don't love it there. I'm gonna actually start making adjustments for next year on this one right now. Oops. Let's see. There's gonna be my top. There's gonna be my no man's land. And I think that's what I'm going to start using. So yeah, I mean, it's decent from here. Like I said, any problems that we have, Europe is going to have problems as well. Again, there are many member states, but they don't have any control over monetary policy. So, again, if we get hit with a second or third or fourth wave of COVID, and again, it's, more negativity comes from it, they're absolutely going to be hit as well. So I think that they are, I think that they will have additional stimulus and again, everybody wants to weaken their currency as much as they possibly can. Their currency rising is not helping them with exports. They're not going to be able to sell in the United States. It's not the most beneficial thing in the world for them. So I do think that they will start kind of trying to roll this one back to the downside as well. So, again, not a trade for today, but I'd be looking at, trying to get bearish this position to roll into the new year. Okay. Dollar CAD. So dollar CAD has been moving. This was a position we had. Let's take this off. Let's see, 4 hour. Yeah, this is one where we just filled the gap. There is your kind of gap position right there. Right there. All right, so this is the exact opposite story. So this is a dollar weakness trade. Now, since that time, again, I'll go on the 30-minute. When everybody's talking about how weak the dollar is, it was basically starting in the CAD. Now, we've bounced off this level twice, right? This 127.80. Is there really a trend in this? And there was. It was grinding. I mean, since really yesterday, you've had more of a push down than a push up. We've seen CAD weakness. Now, has it been fast? I mean, here's an hourly chart. Has this been a fast? Not really, right? I mean, it's been, again, impulse corrections, impulse correction, impulse correction. I mean, so it's been pretty steady. And then every day, every so often, we have one of these big pops up again, right? Where we're at now, I would say that it's I don't know, it's a decent level. It's filling a gap. Really, I mean, until we get back down here, we're kind of messing, like, drawing the curve and saying, listen, this is where kind of our current, top and bottom are. We're kind of sitting in the middle right now. I would say I'd wait for price to come down and maybe start looking for something down here. But again, we need some weakness in the Canadian dollar from our neighbors, right? This has been this is a 4-hour chart. This has been a long grind back down again, back into this 126 area. Got a couple of days of up, and then now all of a sudden it's like, oh God, it's all coming back down again. So I would say I would, going into the new year, I'm going to stay bearish this position. I do feel that, again, the Canadian dollar getting some strength is okay. But at the same time, as you guys know, my wife is Canadian. I get the reports back again. They're on like a month down lockdown. Ontario's locking down, and hopefully they can get control of it. And again, every time we say that coronavirus is under control, it kind of surprises us. They were seeing, spread from, city population into the rural areas, and they were really worried about the rural areas, so they did that lockdown. Just afraid if they can't get a handle of it. And again, through the holiday season, I expect that there will be, increased infection rates. I just feel like this one is also due for a reversal, but I think 127.08 is a better one. And again, that'd be going into the new year, right? Now, dollar Swiss, this one really is kind of stuck in the same level. Here's where we drew the curve saying, hey, if we can get down to 87.91, we're looking to go long. And this is a 4-hour chart. We've had about 16 hours of down, but we're still kind of in that same area. Now, it looks great on the lower time frames. I mean, here's the hourly. You can say, wow, look at this, right? And all it really did was it grabbed kind of your gap right there and just collapsed to the downside, right? That was really your only trade entry. Besides that, it has not pulled back to a decent level. Here, never pulled back, right? Here, never pulled back. Here, based. Here, got close, but didn't give us an entry and then continued to fall. The only thing it's done is it's bounced off this side of the gap, right? We've literally gone from gap to gap. That's all we've done, right? That's all we've done. decent mover to the downside, about 80 pips. So again, it was great if you can grab it, but really your entry was here. And again, emotional spike up, grab those sellers and push to the downside. And haven't really given us a pullback entry. So, right now I'd be kind of switching my focus on this one. Not so much bearish on this one, but again, rolling over to look for some type of a bounce off this 87.91. I think is probably a decent level. The volume on this one right now is ridiculously low. Remember a couple years ago, we had the liquidity problem in the dollar Swiss. Well, we're kind of back in that range right now where the the volume is so low. This one is considered a little bit dangerous in my eyes right now. Not that I think that's going to happen again, but like I said, I think we're so close to a higher time frame zone. Show some patience, wait for it to come back down again, and if we can get a spike or another gap like that, that could be decent. I am very much looking forward to see what this one does the rest of this week. And I would like to see where we start next week, going into a fresh new year. I think that could give us some trading opportunity. But if we get a gap, absolutely take it. Switching gears over to the commodities. So here's gold, right? Here's gold. Pop it here. There we go. Yeah, gold's not really doing much, right? We're literally stuck in the same area. And let me bring this up. Let's see here and go across. So I think it's important to note right now that 82% of clients are net long gold. As far as IG sentiment goes, it's very interesting. Again, we're not really seeing anything drive us that far. Look at this. Gold is flirting with a potential breakout of 1900. Well, that's what I'm looking at right now. A breakout of 1900 is up here. And it may be flirting with it, but I'm not sure what chart he's looking at versus what I am. And again, going to here, we can go to gold, right? And kind of the same thing. I don't really, this is a daily. Let's go down to 30-minute. It looks just like my chart. 1900 is up here. So it says it's flirting with this kind of breakout, but what do we have? A drop-based drop here. The last time it touched 1900, what did it do? It got hammered down, and then again, it ran into sellers here. So right now, although it's been chopping back and forth, and again, that's kind of taking advantage of, it's about a $15 range. It's taking advantage of, the low volume, the retail sellers right now. I wouldn't say the gold has a lot going on. So I wouldn't say that we're looking for a breakout. I would say that 1900 is a level that we need to watch out for in gold. I would say that, if price comes up here to 1892, again, we saw a nice push, a base, and then a very strong push to the downside. But right now, this is where my intraday curve level is. And I always tell you, this center section is called no man's land. And look at this. We are literally going just straight sideways, right? Just straight sideways. Remember, the reason gold goes higher is because people believe in, I need to protect wealth, inflation. Well, we don't have any inflation, and the economy's not in a great place. We just had one round of stimulus. We need another round of stimulus. This stimulus was a disappointment. It wasn't what everybody thought it was going to be. These are all factors for gold to go higher, and it's not there. Now, I don't know. If we go into next week and Biden's transition team says we're going to put another $2,000 worth of stimulus in because we are worse than we thought, those evil guys from the past, right? Again, that's probably more than, what most people expect. That could lead us to punch higher, okay? But until we start actually seeing inflation in numbers, there's nothing on a fundamental basis whatsoever that can drive gold higher. The speculators just can't do it. And this week, I think a lot of the speculators are even scared of this one. So again, I'm keeping this intraday curve level. I think 88.55 on the downside is an important area to watch out for. 1892 and 1900 are areas up top. But besides that, you guys can see this one is like kind of watching paint dry. And again, does it mean we can't trade it? Absolutely not. I call it Nadex butterflies, as Todd mentioned before. If you guys are unfamiliar with those strategies, do a little bit of research on traditional options with butterflies. Again, kind of gives you a little bit of a hand here with how to trade this kind of sideways market. All right. I haven't done it in gold, but it doesn't mean that it can't be done. All right. I just don't look at this one as often. Now, silver's doing the same thing. It's basically chopping back and forth. We've talked about this level here. We kind of went a little bit higher. And again, 27 is a big area, but, going back to an hourly, you can see 26.65. It's an area we marked off right here, right? Same area. We're just hitting the same thing again. That's kind of a top side. This one did have an interesting gap in it as well. Again, kind of keep that on your radar. 25.80. I would say if I had to draw kind of an intraday level right now, I'd say probably here. Obviously grander scale, it would be here, right? Because again, that's where we've seen really strong buying and we've seen great stabilization. Longer term, obviously, I have to say here, we're kind of sitting, again, in that magic middle area that we don't necessarily love right now, and that's why we're seeing the chopping going back and forth. But as far as kind of a, let me move this to the side, just let it. As far as kind of an intraday way to trade this one, dropping this one down to a 30-minute, I would say I would kind of draw my curve level kind of here. Again, we're dealing with the gap, and then we're dealing with, again, a decent base and one test, and now it's been front run. So, if you're looking for, a way to trade silver, I would say the 2662 and then 25 kind of 80, 2575-ish, 2580 would be kind of my downside. Again, either of those two could be interesting for, with our spread or maybe a small binary. But like I said, with no economic news, there's no gauges of inflation or anything like that. This one is, again, not really the best of things to trade this week, because it is based off a lot of, kind of the gold effect, right? The gold effect, and that's why we're seeing a chop back and forth. Last but not least, let me go ahead and pull oil. So here's oil. I talked about it earlier today that we've been bouncing back and forth, and these were levels that we'd marked off before. We'd said before we had this nice little base here, and again, it used it as a turnaround point, then used it as a drop point, then came up and tested it again, and then again, it was a bottom, bottom, top, bottom, top, top, base, bottom, bottom, again, bottomed, and now we're coming back to it again. So, it's been a level that's kind of coming back and forth. Top side as well, I think you got to be cautious of it. I don't think right now, let me see actually, I'll check this real quick. Want to see if tomorrow, I don't think they've given us any forecast numbers yet. Yeah, I mean, here's what they're forecasting for tomorrow for oil. -7, 1.7 mil. So again, last time they missed it by a decent amount. It may give us opportunity. This is going to be a very probably low trading volume week for it. I'm interested to see where we are beforehand. Like I said, I'll remove this, get these just to clear this up and try to make it a little bit more simple. I'll take these two off as well. Want to see if we can drop. So remember last week? Last week we were dealing with this level. So we were sitting here last week, and I said, hey, listen, here's going to be an equilibrium. I'd like to see it come down. And this is where the UK Open happened. So we were here when we met last week. For oil inventory, it came down. The UK Open drove us right back again. The number was negative, but yet it punched up, and then we kind of stabilized again. So I'm kind of looking at the same thing here. Potential areas for tomorrow. Again, I'm going to adjust this here. I'm going to move this forward just so we're not confusing everybody. I'm going to use this level right here as kind of my equilibrium point. Use that as far as my top side goes. This will be my equilibrium point in the middle. All right, so we're going to shrink this down to there. All right. Yeah, so what I'm going to do is I'm going to use this and kind of see where we are tomorrow morning at around 9:30. And again, I'll bring this up tomorrow morning at the 9 o'clock session. I do think there's an area that we need to watch out for right here as well. And I'm wondering if we're going to kind of stabilize here, drop, and use this as our bounce point for tomorrow, right? Like if we have one of these where it like comes down into here, through the rest of the day, and then kind of grinds its way down, right? Oops, not there. Here. And then this is our takeoff point for tomorrow. And then news-wise tomorrow, we're sitting back up over in here. Oops, I forgot that it's a double click to that line. So I'm curious if this will be, basically the rest of the U.S. session, and then the overnight will go down, and then we'll hit the UK session and come back up again. But what I'm doing is I'm looking for one of these basically 4 levels. I want to see if price is able to, again, I want to see the reaction off the UK Open, and I want to see where we are before the news tomorrow to see where we're going to drive. I would say range-wise, though, I do think that this is probably the range that we are kind of stuck within as far as kind of tops and bottoms right now. One thing that kind of is on my radar is, again, that OPEC meeting. Where is it? Here. This OPEC meeting on next Monday. I definitely think could be a big mover for oil. Now, again, remember, OPEC in the beginning of December was talking about what are we going to do for production cuts? We would like to lower the production cuts. Russia, was in favor of increasing production by 500 million barrels a day. And again, demand is coming back, but it's not quite there yet. So I do think this meeting, and again, it's only a 1 day meeting. Any headlines that come out of this, and let me see, are they mentioning it? No, they're not mentioning it right now. I think any meeting, this is going to be an interesting call because again, new year, they were talking about increasing production. We haven't necessarily seen oil fly through the roof. I mean, it broke up to 49 and then kind of rolled back down again. We're back in the low 48 range again. The way that it's looking too with these kind of lower highs, if it comes back down into the 46 range, it wouldn't be uncommon, right? It wouldn't be surprising by any man, stretch the imagination. So interesting to see. But like I said, in the overnight, I want to see how oil kind of reacts. I want to see what it does the rest of today. I would say probably down. I want to see how much basing we get. And again, are we going to maintain here? And again, maybe this is the UK Open, right? If we don't use the lower one, in which case I'm looking for this. But I think either of these two is probably worth a bit of a bounce for tomorrow. Again, low volume, able to be manipulated a bit more. Again, whatever the number comes in, I would expect the opposite as far as the oil chart goes for that. Okay. So that's it, guys, as far as what we need. So again, mark your calendars. Next Tuesday, January 4th, will be our first presentation. It'll be called a different title. If you guys aren't signed up, go get signed up for it. And again, the rest of this week, we will be doing the 9 o'clock sessions, and those will continue as well. We've gotten great feedback for those. With that said, guys, I'm just going to close on this. Have a great new year. If you guys have any questions, you guys know how to reach me. I do recommend you guys get registered for both the new sessions so you get notifications as well as that presentation on the 19th. I definitely have a different way to look at things as far as market psychology, so it is not going to be your standard market psychology talk if you want something new. So thank you guys so much for an absolutely amazing 2020. I really appreciate you guys coming to these sessions. I have a blast doing them. I hope you guys are learning. And again, I get emails from people every so often, basically a couple a week, and it's always good things. And I appreciate the feedback and the love from you guys. And I wish everybody the best 2021. And again, stay safe for New Year's. Enjoy it with family. And again, if you do go out, again, please just be as safe as possible. I don't want anything negative or anything like that to happen to anybody out there that's listening. So you guys take care, and I'll see you tomorrow.